amazing occasion of the State of Tech in Africa 2023. This AfricArena report webinar. We have some incredible people who are going to be joining us today on this panel discussion. As you can see on this slide, we're excited to have everybody with us today because today is probably the third edition of our AfricArena report that we started in 2019. The reason why AfricArena put this report together was due to the fact that we saw a need for people to actually understand the numbers in a different way, with a little bit of a flair of storytelling, and then also comparing all of the different various data reports that is available to us on the continent. So the team has worked tirelessly with the help of many key stakeholders, people like Maxime Bayan from The Big Deal, Ashim from Octera. We have Octera Capital, Matsumo Dise, Phaeton from Flat Six Labs, and many other contributors who have really come together as stakeholders to really help us put this report together. So we're very excited to launch this, and we're very happy to have you here with us. But before we begin with the State of Tech in Africa report, just to tell you a little bit more about AfricArena, if you haven't had the opportunity to get to know us or actually find out about us, here's a bit of an insight to who we are. So just to start off, the vision of AfricArena essentially was that we wanted to build a premier platform to accelerate and really grow the African tech ecosystem. And the way that we do that is that we host a series of events across Africa, and the mandate of it is to connect founders with investors and corporates, strengthen international relations, to bring more foreign investment to the continent, and then also to promote the African tech ecosystem. We started in 2017 as a young startup, and since 2017, with over 460 unique startups who have pitched on AfricArena's stage, they've accumulatively raised about $500 million over the past 6 years. We have about 10,000 attendees who attend our events digitally. We've given away various amounts of grants, benefits, and prizes. We gain about 1,000 startup applications annually. And then, from there, we have about 400 plus investors within our investor network, and so much more that we do on a year-to-year basis. So hold on 1 second. It's a bit of dry air here in Cape Town. Great. Okay, that's better. Now I'm ready. So AfricArena, from last year, we've decided to change our approach a little bit. I mean, if you've been with us for the past 5 years, you've known that we've always run regional events that was focused on, Southern, West, East, and North Africa. This year, we've tried to pivot and change a little bit, and we're trying to move into more of a Pan-African landscape. So we've now opened up 10 open innovation programs that focuses on 10 of the greatest sectors that are coming. 1 second, I just need to get some tea. Great. So with these 10 sectors, what we're doing is that the idea is that we want people to participate in our events wherever they are. So when we hosted Southern African events, it was only open to sub-Saharan startups. So now what people can do is they can literally come, if you're an AI or deep tech startup who's based in North Africa and you want to come explore a thriving ecosystem like Southern Africa that's known for their deep tech or their climate tech or whatever sector, you then can come and we will help you with the learning expedition. We'll help you with soft landing and getting to know and fast track your journey within these ecosystems. So now people can literally jump from one leg to another leg. It's not just closed to any type of region. So we're trying to be more inclusive. So just to help you a bit more about our main events overview of what's going to be happening this year, we'll start off in Joburg on the 29th and 30th of March with Deep Tech, Enterprise, and Climate Tech. From there, we'll head to Egypt, which is a special standalone event where it will be around the time of Africa. The focus will be a bit more on later stage startups in early May 1 to 2. From there, we'll then go to Senegal, where we'll be focusing a bit more on fintech, mobility, and logistics from the 23rd and the 24th of May. In the second half of the year, we'll then head to Tunisia, where we'll be focusing on AI, EdTech, and health tech in late September. And then at the end of next year, in October, we'll go to Kenya, where we'll be focusing on agri-tech, smart cities, and health tech. At the end of the year, in the first week of December, we'll then have our grand summit, which is the Cream de la Cream, where all of the 10 programs will culminate for a sector agnostic pitch competition where all the winners can celebrate, embark in investor relations, come and meet some of the greatest DITs, DFIs, some of you investors in this group and other people on the tour. So we'll be very excited to have you there. This year, we're also going to be having 4 investor conferences. a place where investors can come, gather, talk about governance toolkits, pipeline management, and how we can further foster the ecosystem or the African tech ecosystem. The places where we'll have these conferences this year will be in Egypt, Senegal, Tunisia, and then we'll have one in Cape Town as well. We'll also have our sector-specific founders boot camps with outcome and investment readiness programs, and then the regional summits, which is going to be great, and we'll expand on that a little bit later. We've also launched a very powerful tool that is called our Wired app. So if you download your Wired app, which you can find on the iStore or on the Play Store, this application has a very specific place where you can keep up to date with all the live events, the podcasts, previous talks, panel discussions, and you can also connect with one another on the application. But I think the most powerful tool that sets this apart from everyone else is our deal room. So on the deal room, every startup who has ever showcased at an AfricArena event, their data is on there. You can literally filter out the data and you can search them by sector, team size, funding stage, headquarters, where they're located. And I think the beauty and what makes this tool so powerful is the fact that you can literally click on this number over here and it will take you directly to WhatsApp, or you could email them directly, depending on some of the investors who are looking for more startups for their pipeline or want to connect with other founders. So that's a bit of a nutshell of what AfricArena is up to this year. And without further ado, here are a bit of the partners that we've had in 2022. A lot of people who have been supporting us and helping us build this ecosystem and really further and foster what's happening on the African continent. Also, if there's anybody on this call who is keen to partner up with us or keen to jump on any of the legs of the tour, please feel free to contact me or any of the team. That will be at the end of this discussion. So if you stay on and you want to see some more stuff, definitely we're very open to have a conversation and see how we can help foster this ecosystem. So without further ado, here are some of the really cool team members who have been working on the report. Myself, Nathaniel Vitboy, I'm the program content and ecosystem lead at AfricArena, and my other two colleagues who will then also be taking a look at the key findings of the report. Ropa Musvari, who is the head of venture and investor relations, and then Dan Mabielas, who is our project manager at AfricArena. So without further ado, I would like to hand over to Ropa to kick off the State of Tech in Africa 2023.
Fantastic. Thanks so much, Nathaniel. Hi, everyone. As mentioned, my name is Ropa. I head up the venture investor relations for AfricArena. So in 2022, for the first time ever, we ran 4 VC and conference events across our major regional events. That was in Senegal, Tunisia, Kenya, and Cape Town. We had over 200 investors from across the continent, the US, the UK, Europe, Asia, joining us for 2 days to discuss major issues and things happening within the startup ecosystem. So what we do is after that, participants of the investor and conferences join the Digital Collective Africa, where we identify key action items that we embark on to create documentation and resources that are open source and available for the public to use. So these all live at the www.digitalcollective.africa website if you want to check it out. Can move on to the next slide. So across these 4 regional events, we identified 4 major themes. One was cross-regional investments and collaboration. So how can we build bridges of investment, collaboration, and innovation across the different regional blocks on the continent? What's the challenge that exists with that? And is it all positive? We also looked into how investing in an ever-changing landscape works. So the valuation story, the role of investors navigating different economic cycles. Next, we also looked at measuring the success of exits on the continent. How do we actually measure success of the VC ecosystem? Should we be building or buying startups? How are we going to progress in the future? And lastly, we looked at building sustainable companies. So issues around gender and diversity, governance, standardized documentation. So today I'm just going to look at 2 major themes and just highlight some interesting facts around that. We can move on. So let's start by looking at what the investor landscape looked like. In 2022, the top three investors were, of course, Launch Africa, Y Combinator, Lofty Inc. But we predict that this picture is going to change a little bit in 2023, with Launch Africa busy raising their fund two, Y Combinator slowing down in terms of investments, not only on the continent, but globally, and Future Africa also slowing down on investments. But we do predict that we will see some new comers and some other investors doubling down on the continent. So the likes of 500 Global, who are looking at North Africa, Catalyst is looking to do at least 10 deals every 6 months. So there's really dry powder in the ecosystem, and we should see significant number of deals coming through. We can go forward. So looking firstly at investor sentiment. So 2022 has obviously been quite interesting. People have called it different things: the downturn, the market correction, the reckoning. It's interesting to note that Africa is probably the only region that saw a growth in year-on-year funding by number, so at least 5% increase in the funding that we received. That being said, we still received the smallest slither of the pie, with only 1.2% of global investments coming into the continent. But really looking at why there was this downturn or market correction, it was largely due to poor performance of these tech companies on public markets, which impacted VCs. So VCs were struggling to raise from their LPs, and those who actually had funding were a little bit more stringent in the way that they deployed capital. As a result, there was less competition in how these deals were done. And so a lot of startups begin to sort of lose their valuation. So an important question that was asked was, are African startups overvalued? And the answer is there is no one answer to that. It depends which investor you're talking to. It depends which startup you're looking at. And it depends on what region you're looking at. But what we have seen is that there is a shift in terms of the market sentiment. So it's become more of an investor market, with investors having an upper hand and being able to actually get deals at a lower valuation. Another really important question that was raised is there a way to actually standardize valuations? And the simple answer is no. Valuations is more of an art than a science, as we all know. But perhaps there is some thinking around creating a framework that will help guide the way that investors look at valuations across the continent, which is really important because it speaks directly to how we look at exits in the market. We can move on to the next one. So this brings me to benchmarking success on the African continent and exits. So VC and the VC industry is really about people putting in a lot of risk in order to get a very high level of return. So the golden egg in this case would probably be getting an IPO startup. But realistically, this has not really been the case for the continent. We've got a handful of IPOs, like the likes of Fori and Jumia. What we have seen more prevalent has been mergers and acquisitions. And the data supports this. This report by Brighter Bridges indicates that there has been a steady increase in the number of merger and acquisition activity on the continent. And we also predict that this should continue so in the next year. So as investors, we identified two main types of mergers and acquisitions: the exit merger and acquisition, which is really startups exiting to, say, a corporate or a larger business, as well as mergers and acquisitions of consolidation in the value chain. These have been probably more common, and they happen in a lot of different scenarios. For example, there is mergers and acquisitions where a startup is looking to scale into a different geography, or mergers and acquisitions occurring where there is 10, let's say, logistics startups in one geography, and the winner takes all. So basically, the bigger startup starts to buy out the smaller ones. And lastly, probably less exciting, is mergers and acquisitions happening because some companies are not performing very well, and so they are actually then bought out so that the investors actually get some sort of a return. If we actually look a little bit deeper into the numbers, if we can go to the next slide. So there has been at least 100 exits in Africa between January 2020 and October 2022. I saw Maxime just posting that it's 110 now. And a lot of these have been seen, say, in South Africa. This could largely be to the fact that there's a lot of corporate activity that happens in South Africa, so a lot of acquisitions happening there. Egypt is a close second, followed by Nigeria and Kenya. And the key sectors where we see a lot of this merger and acquisition activity is fintech, probably largely due to the sheer number of deals that happen in fintech, as well as logistics and transport. And we are also seeing a lot more within sort of the climate space. So yeah, that's a little bit about what's happening from the investor perspective. I am going to hand over to my colleague Dan, who's going to give us a slightly deeper understanding of what's happening with the rest of the ecosystem. Thank you.
Thanks, Rupa. So we were interested to have an overall look at the African ecosystem in 2022, and what was really the winning formula for certain regions. What can we learn from the countries who did well? What are the top sectors and what still needs to be improved? So as you see on the screen now, these two countries are commonly known as the standing Big Four, representing 70% of the funding raised by startups in Africa. So for instance, if we have a look at Nigeria, with its well-known 5 unicorns, it's ranked as number one, with $1.2 billion raised in 2022. With its increasing population, 70% are classified as youth and mostly banked, great government moves like the Startup Bill signature this year, a great local international ecosystem support, it is still dominant and standing at the top. And I've had actually the privilege to interview one of the panelists, Ashim, on this topic, and more insight can be found in the report. So standing on the second position, Kenya, which has raised $1.1 billion, was known this past year for its ease of doing business. So it was actually one of the main reasons why so many investors have been attracted with the recent moves of the local government. I mean, we have seen many moves locally to enable startups and also IT companies to do business in a better way. So all these things together come and participate in the winning formula of this ecosystem. So moving on, third position, Egypt, which has been constant and still at this great position with $820 million raised. It is well known in terms of their attractiveness and bridge between North Africa and the MENA region. I mean, we have seen many great developments in the local ecosystem with a great also VC network, local VC network with the likes of 500, IFC, Cairo Angels, and more that I can mention. And then on the fourth position, South Africa, which has raised a total amount of $555 million in 2022, has seen itself declining the past year with various local challenges, including a decline in local startup supports, as you can see with the stats, with 25.7 of the startup accelerated. But there are more to come, I believe, this year for SA, and we hope that they are still going to stand in the Big Four. But if you move on to the next slide, Nate, outside of the Big Four, the top four, we also have identified 2 emerging ecosystems. One in Ghana, which is evolving very rapidly, especially in the agri-tech and energy tech sector, with $391 million raised. 3 actually of the 10 top startups who have raised capital are from the agri-tech sector. So we can see that agri-tech, climate tech, energy tech are coming more onto the scene. And there's actually section on the report that you will find when it's going to be published after this webinar, where you're going to find more about this specific sector. And then Tunisia, to end up with the great news that you have all heard that has been moving the African tech ecosystem recently, the exit of InstaDeep for over $600 million by BioNTech, putting AI really at the center of tech, of the tech ecosystem in Tunisia. So moving to the next slide, just an overview, a specific look at the sectors. So one interesting thing about 2022 is that fintech has been falling from 53% to 37% in 2022. And energy, climate tech, followed by logistics, are rising, catching up. We see what's coming in the coming years, especially this year. And especially in countries like Ghana, like I mentioned before, we can see more and more development in that particular sector. So we cover a whole section, like I mentioned earlier, on climate tech, so be on the lookout for the report. And moving to the next slide, a quick look at the gender and diversity. An interesting fact, only 4% of capital have been raised by females, which is less than 25 times, which is actually, 25 times less funding than male-led ventures. There's still a lot of progress to do in that area. If you have a look at the big four, for each country even, only less than 20% of founders are female. So these are actually interesting insights, and we hope that the panel will also address that. And just to end up, to give a bit of an overview of the state of the Startup Act in Africa. So if you move to the next slide, on the map that you will see when it's going to appear, we just had a look at the different stages in terms of the countries in Africa that have started with the Startup Act. One thing that is very interesting is that we see the work paying off with Tunisia, with their work with small capital. You can see on the ground, the Startup Act has enabled many things, and it has also played a huge role with the acquisition of InstaDeep. We can see in Nigeria, 19th of October last year, we had His Excellency President Muhammadu Buhari, who signed the Nigeria startup bill. So more is to come this year. Republic of Democratic of Congo, also late 2022, President Felix Tshisekedi signed the startup bill into law. So that's also, we'll watch out what will happen in that specific country. And then South Africa, Kenya, a bit of status quo there. We have seen further engagement with government for different nomad startup visa and Startup Act, but it's still in progress. Matsi can give us a bit of an overview on that if the occasion presents itself during the panel discussion. And Kenya, with the recent election, we see what is going to come for this year. But without further ado, I will let Nathaniel take us to some of the numbers. Over to you, Nathaniel.
Fantastic. So getting to the core mandate of why we actually started the State of Tech in Africa report is because we noticed there were quite a couple of reports out there that were doing a lot of data, doing a lot of different type of analysis on the African continent. So what we did is that we took a look at the three reports, which was the Big Deal, who kind of is going more infographic on their on the Big Deal. So if you go check that out, they obviously bring 2 infographics every weekly about data, Partech, and then Brighter Bridges. So we've interviewed Maxime earlier or at the end of last year, and then when analyzing the reports, you'll notice that the definitions are significantly differ from one database or platform to another, which means that when you analyze data, you need to be careful. For instance, if you utilize Crunchbase or then Brighter Bridges in comparison to the Big Deal, you'll most likely notice 3 different figures on the deals made. So investments and then also in startups. So the question to ask is, why are these numbers so different? According to Maxime Bayan, the reason why these numbers do not correlate is because a lot of tech investment data capturing platforms do not solely focus on capturing all of the deals in Africa, but are more focused on global deals, especially in spaces like Europe, the Americas, and Asia. So in addition to a lot of deals and investment data platforms, the different frameworks of data capture, for example, you would say the data captures a co-founder of the startup in the US in comparison to South African, and that, the way they're operating in Africa as an African startup. However, if you put a lens on, for instance, the Big Deal, we cannot capture them as a startup within South Africa or Africa because they were never launched in the country in the first place. So most of the startups in the continent are registered in the US, which is interesting. But obviously, as Dan mentioned earlier with the Startup Acts, it's mainly because we haven't progressed or we haven't accelerated those as far as we wanted to. So one of the criteria for putting a lens on the big deal is to look at where the team is based. So if less than half of the team is based outside of Africa, there's definitely something that needs to be checked. It's crucial to be careful when analyzing the numbers according to the purpose of the report. And then the big deal is mainly focused on Africa, African founders, startups who have started in Africa. You'll also notice that, the big deal only focuses on disclosed equity deals. Park covers fully disclosed, partially disclosed, and confidential deals. And then Brighter Bridge kind of has a mix of equity and undisclosed deals. So when you look at the second source of difference, is obviously what we mentioned there was the undisclosed deals, and then also focusing on private, not private equity deals, but also like the rise of debt funding. So actually, something that I really want to focus on right now is this new incredible rise in debt funding that's happening on the African continent. So if you've noticed, between 2021 and 2022, debt financing and debt amounts in Africa has more than doubled on the African continent. Just to take a look at global markets, which is quite interesting, approximately in the USA, there's about a raise of about 20 billion US dollars, which is VC-backed companies. In Latin America, you take a look at stats like 18 billion US dollars in 2021, and then also $538 million in the Asian markets. So something that's interesting about this is that, when you see the rise of debt financing taking place, you actually start seeing it linked to a bit of a maturity in the market. So sectors, when you look at the African continent, current sectors who are dominating within this is fintech, clean tech, and commerce. And the question is why? Why are these markets, outshining and acquiring these type of deals? So the reason why that's happening is because it's more, intensive. It's not asset light. So, fintech is asset light, but there's a lot of requirements that they need in order to cover costs. In the long run, when you actually go into debt financing, one of the key indicators, or one of the benefits of it, is that in the long run, it's not really as expensive for founders. And also the second point of it, it also helps them to lessen their dilution of their companies. So we're definitely going to see a lot of this taking place in the next year in 2023, and it's definitely going to change the game a little bit. Another conversation that we want to have is that is the conversation on the DFI venture, debt equation. So it's quite interesting. So you'll see that DFIs have been instrumental in structuring debts for sectors, renewable energy companies on the continent. The current key players, as you can see by this infographic, is that there's current key players like the International Finance Corporation, the US International Development Finance Corporation, and the CDC Group. In 2023, you'll see more active players like FMO, E3 Capital, some of these other players who will start rising in debt funding. So definitely something exciting to look forward to. Then also, this is an interesting insight, because what we expect to see and what isn't currently happening in the African ecosystem is the fact that there is a lack of venture agnostic debt offerings. But we're hoping that in this year, there's going to be a more grow in that ecosystem, and there's going to be growing maturity. So the sectors that are of interest for 2023 are sectors like logistics, agri-tech, health tech, and then also ed tech being potential sectors of interest. So if you see in this market map that's in front of you, we see examples of debt providers and debt raisers that are most active on the continent, such as renewable energy companies from the majority of businesses that are active in venture debt space. Then moving on, you also see debt financing options that are currently very, very popular on the African continent. So it's like loan syndicates. There was a beautiful case study that came out on Future Africa that kind of highlights a bit more on the case illustration of MSF Africa in 2021. So if you look earlier in that year, Africa's largest digital payment network secured an additional $100 million in equity and debt funding, led by Adamias Capital Partners, which is quite interesting to see. And loan syndicates kind of focus on commercial banks and venture capitalists who pool funds together to fund various African tech startups. The other one is B2B financial lenders, which is more like fintech lenders on the continents that make it an attractive use case of venture debt. So this is because the debt they raise is often deployed to enterprises that require working capital to grow and scale. So Andrietta Muforo, partner at TLCom Capital, noted at the Africa FinTech Summit that was held in Nairobi earlier that year, that venture debt is an asset class that is missing in the ecosystem. Most startups are gradually becoming lending companies. They are leveraging customer data and analytics that they have about their customers to inform lending decisions, which really becomes a powerful value proposition for this method. And then the last one is asset-backed venture debt. So as Africa is, developing region, we are still in the process of building infrastructure. And as an asset-light approach premised on, the Silicon Valley model, it isn't applicable in Africa. So an asset-light business model is one where a business outsources its non-core assets and capabilities to a third party. So therefore, businesses that have their assets and that are leveraging technology and infrastructure to scale are a suitable option for venture debt offering across Africa. The sentiments of building an asset-light business in Africa are often far-fetched, misplaced, and grossly exaggerated. For the sake of time, we cover a lot more. There are some data from our alumni database where we see that most of our startups, 50% are equity only. There's a rise in hybrid equity and debt, which has come up to 45%. There's 5% debt only. So, we're really hoping to see in 2023 that a lot of these VC funds are going to adopt more of a hybrid equity and debt model. There's going to be more information in the report about debt per region, focusing on debt per region, and also focusing on the equity and seeing how do they measure up with one another. But without further ado, I want to hand over to our colleague, for the sake of time, Christoph, to chat a bit more about 2023 and our investment forecast.
Hi, everyone.
Hi, Christoph, we can hear you.
So just as a final slide, a perspective on the guidance that we provide every year since the first edition of the State of Tech in Africa report. AfricArena spent some time on a model that's been trained now for 4 years on trying to give some kind of a forecasting of the investments in the African tech sector going forward for the next 4 years. So we have been fairly accurate in the last 3 editions of the report, where the actuals that were reported were within the range that was predicted by AfricArena a year before, at the beginning of the year. So at the beginning of 2022, we gave a guidance in terms of where the investment would land, and we ended up at 6.5 billion on the upper side of that forecast, which was $6.5 billion. Going forward, and like what some prediction indicates, we foresee that the market will remain flat or show a moderate growth of up to 13%. And that's on the back of what we see will be a decline in equity investment, particularly in the first half of this year, more than offset by a continuous rise in debt venture funding, which we expect will be accelerating. It has seen a growth of 100%. Continue to have a double-digit growth into this year. Further than 2023, we believe that the growth of the market will actually accelerate, expecting that the downturn in the North American and European market will be largely consumed, and geopolitical factors will provide some peace. So we see a growth of 20 to 30%. Which will continue into 2025 and 2026. So we see the market pretty much on the back of GDP growth, demographic elements, and historical trends, available dry powder on the market, and the continuous fundraising of a number of firms that are Africa focused. The market should exceed the $10 billion mark around 2025, between 2025 and 2026, with an upper forecast that goes almost to $13 billion in 2026. So these are optimistic numbers. They should give us some hope that the market in Africa will continue to rise and should double within the next 4 years. Thank you, Natalia. More information on the report, which you can download on the Insights section of the AfricArena website, and we'll provide you with a QR code at the end of this session.
So we're just going to get straight into it. I would love to introduce you to the moderator of this incredible panel put together for the State of Tech in Africa 2023. So I would like to welcome Anthony William Catt, who is co-founder at the London Africa Network. So you are more than welcome to take over, Anthony.
Thanks, Nathaniel. Thanks, Christoph, Roper, and Dan, and all the team at the AfricArena for putting on this fantastic event. And hello to all of you from wherever you're tuning in. I know we've got people from Northwest, East, South Africa. We've got the US, Europe here. So thank you all for tuning in. And be sure throughout this conversation to engage with in the chat function. You can put your questions in there, and we'll definitely try to get some of them at the end after I've got into some of the key part findings of the report that we want to discuss with our amazing panel, and also equally make sure to connect and engage on social media with the AfricArena team and share what you're hearing from today's session. But thank you once again for joining us. Obviously, we've just broken down the report, so I'm not going to go into any long spiel about the findings just yet. What we're going to do is we're going to get straight introducing our fantastic panel we have today, who represent all corners of the ecosystem, from investing to reporting to ecosystem building to government and policy. And we're going to be covering with them 4 key topics that are putting out the report. Firstly, we'll be looking at 2022 and the numbers and what that might mean for 2023. What are some of the developments we've seen in the ecosystem that are going to be fundamental to what we'll be doing in 2023? Bit of public policy, we'll look at the starter packs, what's worked, what hasn't worked, and what can we expect coming up. And then we're going to have a specific look into one sector that's really on the rise, which is climate tech. But before we go into those areas, I would like to welcome my panel to the screen, should I say. And I'm going to give them all quickly 1 minute to introduce themselves. So we're going to start with Ashim, then we'll go to Maxime and Fatan, and then Matezi to introduce yourselves, say where you're from, what you're doing, and what you're looking for from today's session. So Ashim, I welcome you.
Thanks, Anthony, and welcome everyone to this wonderful panel. Really excited to be here. I am representing Terra Capital. I'm the managing partner there. We are an early stage fund headquartered in Lagos, Nigeria, Pan-African, gender lens and impact focused, and generally really excited to see all the development on the continent.
Thanks, Ashim. And Maxime.
Yeah, hi everyone. Maxime here. I'm head of venture building and head of venture partner with Catalyst Fund. We are Africa climate resilience focused VC and accelerator in the continent, and we just recently announced the last 10 startups that we invested in. And yeah, we provide capital as well as 6 months venture building support to startups in the climate resilience space. I'm also the co-founder of Africa, the Big Deal, that you have heard a little bit about earlier today. Thank you for having me.
Thanks, Maxime. And Fatan?
Hi, hello everyone. Thank you again for the invitation. My name is Fatan Laisi. I'm Associate Director at Flat6 Labs. Flat6 Labs is a VC fund and also managing several acceleration programs and startup programs. We are active in the MENA region. We are based in actually 7 countries across the MENA, and I'm based today in Tunisia.
Great, thanks for joining. And finally, Matezi. Oh, Matezi, you there? So we're on mute still.
It's Matsi.
Sorry.
It's fine. So hi, everybody. It's Matsi Mudise. I am all the way from South Africa. I'm the founder of Uraha Africa Holdings. We are in skills tech and skills training, but I'm also a board member, the chairperson of the Technology Innovation Agency in South Africa. And I also head up the South African Startup Act movement. It's such an honor and a pleasure to be here today.
Thank you all for the panelists for joining. We've got a ton of questions I want to get through in the next kind of 50 minutes or so. But of course, as I said, I would love to get some questions from our audience. So please do put any questions that you have in the chat. We'll make sure we try to get to as many of those at the end. So kind of kicking us off, we've talked a lot about the numbers of the report. So it's naturally a good starting point. And I think if we could define January as anything in the African startup ecosystem, it would definitely be the month of the numbers, as it's infographics on social media feeds, dissections and debates on WhatsApp of all the reports that we've seen. And with this research and kind of data reporting infrastructure really starting to ramp up, we're kind of almost spoilt for choices of the sources we have. And this report that's coming out from AfricArena is a fantastic highlighting of some of the key findings across the ecosystem. So to kind of kick us off, I'm going to go straight with you, Maxime. Obviously, with Africa, the big deal, you are reporting throughout the year on investments happening. You are providing fantastic stats and infographics, spotlighting some of the key findings. So what for you really are the kind of 2 or 3 big numbers or stats from 2022 that we should be keeping an eye on going into 2023 that might inform us of what we can expect across the ecosystem?
Thanks, Anthony. Yeah, there's definitely a lot of numbers going out this month, for sure. But the first good news is that it's not always been the case. I mean, a couple of years back, there was not that much number when we started tracking stuff with Africa, the big deal. There was not much around. So it's great to see more data, more transparency, more analytics on this topic. So yeah, that's exciting. A couple of numbers I would want to earmark, you know, beyond the total amount of dollars and the total amount of funding that we already discussed. I think one thing I'm particularly excited about is the number of deals, especially deals above $100,000. For the first time last year, there were more than 1,000 throughout the year, and that's definitely a strong proof of the dynamism of the ecosystem. It's not necessarily 1,000 startups, because some startups have raised different deals throughout the year, but it's probably close to that. So maybe somewhere between 900 and 1,000 startups that have raised funding last year in Africa. So that would be interesting to compare with this year. You know, quick math: if you have 1,000 deals throughout the year, you need you know, somewhere between 80 and 100 per month. So you know, that's something that we'll keep a close eye on. And another interesting number that's really exciting is the number of investors that have deployed capital last year. And again, we are above 1,000 just for the year. So that's easy to remember: 1,000 deals, 1,000 investors. And that's also very exciting. Yeah, we're talking about unique investors that have written at least one check to a startup, to at least one startup last year. What's interesting there is that we are seeing a growing number of Africa-based and Africa-focused investors in that mix, with actually the share of deals with at least one Africa-based investor growing, you know, year on year. And I think we're now over 50%, or 40% of the deals that are above $1 million, where there is at least one Africa-based investor. So all these things are very, very exciting, and you know, early signals that are showing that, you know, the ecosystem is definitely maturing nicely. So I would keep an eye on these two numbers.
Fantastic, thanks, Max. And so obviously these are kind of the growth numbers that we're looking at. And it's exciting to hear that we've got more investors coming in, and actually it's nice to look at the large scale, big investments, you know, those unicorn level companies coming through, but actually volume of deals going to businesses is probably equally as exciting, because it's showing more companies coming through and being successful in their growth. But what about then, what are some of the concerning numbers you've seen from 2022? I know we were kind of talking previously around kind of funding going into female founders and what changes in 2022. What's your perspective on that?
Yeah, I think that it's a kind of an alarming number that only, I think, 3% of deals went to, or of funding went to women entrepreneurs, or women or female founders. I think that as VCs, we have the responsibility to tackle the gender disparity in investment. We need to be more aware about our unconscious biases and actively seek to overcome them. And we should also evaluate startups based on their potential for growth, for market opportunities, and not only on gender. Something else that we can do as VCs to increase the number of investment towards women entrepreneurs is maybe also make conscious efforts to diversify our portfolio or our pipeline by, for example, including more female or women in the top management of VC funds, maybe also creating some kind of events or networking events around women entrepreneurs, partnering with organizations that support women entrepreneurs and female initiatives. But also targeted outreach is very important to be able to increase the number of deals that go towards women entrepreneur. Something, for example, that we have done at FlatXlabs is that we created or put together a program especially dedicated to women entrepreneurs. We started with a pilot in Egypt, and now we are operating that also in Tunisia, and we are seeing the impact of that with the number of more women entrepreneurs in the ecosystem, but also of the number of investment that we are investing in women entrepreneurs. Maybe the last thing that we can do also as investors is to not only provide funds, but also provide support as mentorship, access to our network of experts, of coaches to women entrepreneurs, also a lot of visibility, give women a visibility and give them credit for what they are doing. So I think that these are baby steps, but I think that they would be effective if a lot of VCs can take these initiatives to support women entrepreneurs.
Thanks, Tim. I'm conscious as well that hearing that side is you're looking, saying, okay, it's one thing that we need more female-led companies raising funding representative, but we also need to have more representation on the other side of the table from the investor perspective.
Absolutely.
I'm very, very happy then to know that we've got, two other members of our panel very much represent that other side of the table and have been involved in fundraising and ecosystem building. So Ashim, Matsi, is there anything you wanted to add to the comments Fatima made that you think are relevant to help us see potentially shifting that needle from 3% to higher in 2023?
Absolutely, Anthony, and thanks for highlighting this, because it is certainly an alarming number. One of the things that would be interesting in the numbers to see, and Maxine, maybe this is for you for the next time, is for us to also understand what actually the pipeline looks like. The conversation oftentimes has been around, oh, there's a dearth in pipeline. There are no female founders. I don't know where to find them. Personally, I find it to be a myth. Our portfolio is almost 50% female-led founders. And so, clearly they exist. Potentially, of course, as Fatin has said, we've got to focus more on being more intentional with regards to how we deploy funding. It will also be interesting to, when we're looking at the numbers, to say, out of the female-led startups that did in fact receive funding, what sectors did they represent? Oftentimes there's conversations around female-led startups oftentimes being in softer sectors, for instance, agriculture, education, or healthcare, that are oftentimes not as highly funded as, for instance, the fintech sector. So it'll be really interesting to also understand, is part of that funding gap potentially A, because there's no pipeline, B, because some of these softer sectors are typically not attracting as much capital as some of these other sectors. And what are the other sort of underlying factors towards it? So I'd love to continue to see a lot more data coming out with regards to, the funding gap for underrepresented founders, such as female founders currently. But certainly couldn't agree more with Fatin with regards to the diversity on the other side. We have to ensure that as we're building teams in the VC investor landscape, we are building diversified teams, not just within our small, teams, but also to say, what do my venture partners look like? How diverse is my investment committee? Do I have an diverse advisory board? And really the entire sort of members of that team, how diverse do they look and feel? And, how are they able to then drive that pipeline through to us as a fund to ensure that we can, in fact, be intentional about deploying capital to female founders?
Thanks, Ashim.
Yeah, so I think just to add to Ashim's point, we are quite boring in terms of what we look at as investable, right? And if you're now saying you want to get more females in the pipeline, you want to get females to be invested in, what do females do? We love beauty. I'm wearing lipstick, right? There's beauty tech, there's agri-tech, there is food technology. We shouldn't necessarily see it as a softer industries. These are industries that when we wake up, I interact with these things like beauty, like cosmetics, like food. So we need to think out of the box and say, where are the females? What are they doing? What are they innovating in? Where are the technologies in these spaces? And then when can we start investing in them and creating strong pipelines of that, accelerators and incubators that actually take women? If you look at the top female, females that are really, really, in the top female earners, the billionaires, globally. These are females that you find them in the cosmetic industries. And they didn't really have to do much besides innovate in a space that a woman will actually interact with that on a daily basis. So we really do need to think out of the box a bit if you want to change the playing fields.
Fantastic. So I'm hearing there is the three kind of key points there, and we've already deep dived into the kind of women founder side of things from a numbers perspective. Is we need better representation on both sides of the table. We need to be able to dig deeper into the data and numbers to really understand what's going on. And as we talked about there is actually maybe have an industry and innovation kind of lens first to where we're going to find that those talented women that are building businesses in the industries that they may have deeper roots to, that may then surface those future founder leaders. So I think that's a great point to go on. And I think Max has also been given his marching orders to go deeper on data for 2023. So I hope he's been taking notes for next year's report. Let's then step away from the numbers a bit. Let's look at the ecosystem and what's been going on. And Africa is the second largest and second most populous continent with over 54 countries. It's divided into 5 major regions. And obviously AfricArena, you see with its tour, it's very representative of where it goes to cover the entire continent. And one of the topics that came up when I was at the AfricArena Grand Summit with a number of you guys and at the VCN conference last November was this need to build bridges of innovation between the 5 regions, especially between North and Sub-Saharan Africa. So for 2023, I kind of guess what is the outlook from a Pan-African regional collaboration standpoint between key countries? I know we're all kind of actually representing different areas of the continent right now. So I guess for me, first and foremost, where does the focus need to be when it comes to ecosystem development and bridge building? Is it in digital skills and talent? Is it in more investors and investment? Is it the regulatory environments we need to look at, the tech hubs and the national infrastructure? What is it from a country to country perspective that's going to allow us to build better Pan-African bridges of innovation? I'm going to go back to Ashim first. Obviously, kind of that West Africa representation from Nigeria. What's your perspective on taking there? Where do we need to be focusing in 2023?
Well, I think, Anthony, you make a great point about building bridges of innovation and really saying, well, how can we leverage of, skills of technology and generally innovation across the continent? And maybe just to throw in here that I think, the massiveness of Africa oftentimes is simply absolutely underrated. If you look just from a land size, from the number of countries, 54 different countries, thousands of languages, different tribes, religions, cultures, that are represented on the continent, it potentially throws a light on the challenges around building those bridges. And in fact, saying, well, we're not one homogeneous group of people, and we're not one country either, right? Which obviously just means that, as we're looking at those bridges, we've got to also just understand that. Of course, there are already established ecosystems that have shared, sort of bilateral agreements or multilateral agreements that obviously have helped in the past. I believe that there has been actually a lot of sharing of innovation across board as well. And a lot of that has been accelerated by, the VC ecosystem and sort of the players within that, whether those are the startups. So for instance, through, mergers and acquisitions, because there, of course, is always sharing of IP and sharing of talent, whether that is through the investors and sort of other adjacent players and accelerators, incubators who've really been working with the government together to say, we need a more enabling environment. And I think for me, that really is one key aspect to start with, to say, we need to build a more enabling environment and continue to push for that. So it's wonderful to see that there's already, a handful of countries on the continent that have passed a Startup Act, with, Tunisia having led the sort of front on that. Nigeria thankfully passed their Startup Act last year, as was mentioned in the presentation earlier. And that really does enable the ecosystem. But what it also does is that it influences trust. And trust in this space of high-risk assets is really important. Trust for local investors to understand that, okay, look, you know what, the rug isn't going to just be pulled out from our feet. Trust for the innovators, for the entrepreneurs to understand, how they can go about innovating, that there is support for them through private and public, funding, but also through, innovation labs, through sponsorship on patents and all of these kind of things, tax incentives and all of those things. So I would really place, that regulatory side quite high. But of course, we also know the challenges around digital skills and talent. There has been quite a flight of talent from the continent across board. And we do need to focus on ensuring that we continue to build a pipeline here. But we've also got to look at how do we retain talent. Some of that is around, what does the infrastructure look like? What does the security and safety on the lands look like? But also, what is the movement of people? Is it possible to just move from A to B a bit more easier? We still have challenges traveling within the continent, not just logistical, but, from visas, as a Nigerian, it's not so easy to get to Egypt, for instance, or to South Africa. And so if we don't, ensure that we get these bridges closed, it's going to be, it's going to continue to be quite difficult to get innovation across board as well, because we can't even get our people across board to, in fact, be able to share some of that knowledge.
Thanks, Hashim. Okay, so that interesting on that kind of that cross-border piece, and even the simplicities of visas and getting those things in place, and almost it makes it attractive to go to countries where you can just get a digital visa on entry, rather than maybe say the one I'm trying to get for Nigeria in 2 weeks' time, which is taking a little bit longer. So if we drop then down to Southern Africa, Matthew, what are you seeing from a Southern Africa perspective? Are you seeing any good examples of the private sector coming in? Obviously, I know we've talked here about the need for government to step in with the starter packs, and we're going to kind of look at that a second in the next section. But is there anything from your perspective in the Southern African region, particularly when it comes to private sector intervention, that you think is playing a part or needs to play more of a part in ecosystem development?
Sure. Thanks very much, Anthony. I think the key role of the private sector is to provide market opportunities for technology startups, whether it's buying from them, whether it's integrating them into your own value chain so that they can innovate on your behalf. Because if you look at the financial services sector, there's a lot of innovation in that space, and brick and mortar banks are going to fail to exist. I mean, when last did you go inside a bank to go withdraw money or go deposit money? Haven't done that in a very long time. So private sector has to start aligning itself to innovation and technology and seeing them as a way of innovating. Because if they fail to do that, if they fail to acquire them, chances are, as a banking institution, you will fail to exist. And then also, we're finding that there's a lot of corporate venture capital. So companies that are creating VC funds. In South Africa, we do have a legislative framework that allows for corporates to support small businesses, especially Black-owned small businesses. So it makes it easy for them to have what you would call an enterprise development fund. And then also procuring specifically from small businesses or, young people or people with disabilities or young Black females. So there is an incentive, sometimes a tax incentive, to ensure that you would be able to benefit on that, but then at the same token, you'll be able to benefit and integrate, that sector of the economy. And then I think also identifying challenges in the ecosystem and working together with the government to find solutions, because as private sector, we tend to either sit on the fence or be on the other side of the fence and throw stones at the government. So we are finding that it's better if you collaborate, you come up with solutions, you partner. I think there's a lot of skills in the private sector that can be deployed in the public sector. So I think there's a big role that the public sector can play. And let's be part of the solutions and not the problems. And that's what we're trying to create down here in South Africa.
Fantastic. And I like that you brought in there about the kind of corporate venture capital and that kind of more big business intervention and support. We're talking about debt financing as well as equity, and the corporate venture, CVC can be a big part of it as well. Before I come to Max, I want to kind of talk about the European Pan-African bridge that he had experienced in. Fatin, obviously with Flat 6 Labs, you guys are covering the whole of the MENA region in your programs, intervention support. So maybe from your perspective as an organization and what you do across borders, are you seeing any good practices or implementing good practices that are allowing for that collaboration between countries and regions?
I think that I'm going to build on what Ashim said. And we need to understand that each ecosystem has its own specificities, its own culture, its own habits of consumption. It has been 11 years now that we are operating in the MENA region, and the way that Flat Six Labs is operating in Tunisia is completely different from the way we are operating in Abu Dhabi, for example. The market is not the same. The pipeline is not the same. The needs are not the same. But what we can do and what we are doing is that we are taking a general framework and we are trying to personalize it for the ecosystem where we are based. For example, for Tunisia, and thanks to the Startup Act, actually, I know that we're gonna get into that afterwards, but that was a turning point in our activity here in Tunisia, and it was such a catalyst for the fact that our startups are now more attractive for investors, but also that our startups can leverage their products and that can penetrate other markets. So I think that the only thing that, or the only advice that I can give to anyone that would like to build bridges between ecosystems is to try to understand the ecosystem and not try to implement what you are doing in your country, in the other country. Try to really personalize and adapt to the needs of each ecosystem.
Fantastic. I think that rounds it off quite nicely, but also kind of allows, then we talk about, you know, if you're talking there about actually making sure it works in your country, then I guess kind of reverse engineering is only then finding the bridges as and when the opportunities arise rather than trying to forcefully build them. Max, we met back in 2019. I think we were at the Google's Africa VC meetup in London. And I remember then you were talking about that kind of bridge building that you were doing between Europe and Africa with venture building. So I'd love to hear from your perspective. Obviously, we talk a lot about Pan-African companies going global, raising money in the US and the UK and finding out. But equally, you know, we're seeing bridges coming the other way from Europe to Africa. So where are you seeing, what experience have you had of kind of positive ecosystem building between, say, Europe and parts of Africa?
That's a tricky question, and probably my answer is not the one you expect.
We want honesty. Honesty is what we want here.
I don't feel that there's necessarily anything from Europe that African entrepreneurs need to learn.
Okay.
And to be honest, the reason why I work in the African startup ecosystem and not in the European one is that I feel that the startup being built here in Europe compared to the ones in Africa, most of them are not really solving important problems. We're just bombarded with solutions to make our life that are already very comfortable even a little bit more comfortable, you know, building services that are just around convenience, pure convenience, so it's in comfort and comfort. While the startups that I have the chance to work with through Catalyst Fund, for instance, are you know, working on providing more affordable food, providing better access to emergency healthcare, providing better access to energy, and so solving real problems. So I find it amazing to be able to use tech to solve these kind of problems, less or so to put together a solution for people to have someone to walk the dogs.
Well, Max, when you say
of course,
that,
it's general. It's, you know, I'm exaggerating on purpose, but it's especially when you track like deal sizes and so on, like I do on a constant basis, and you live in a market where like you have rounds that are disproportionate for solutions that are really just for the top 1%. Yeah, it's it's a little bit.
Is that just a European observation, or would you apply that same to North America and some more well-established and matured startup ecosystems? Are they all in that similar position, or is that just a European thing? And I'm saying that because I know we've got people from the US here, but also founders from Africa who might be able to go with this.
I think it generally applies to North America as well. I mean, and again, it's not the case for all the startups, and there are of course entrepreneurs in Europe and in the US that are building, super impactful solutions and so on. But it's just that I want to make, a point that the fact that, some of us at Catalyst Fund, for instance, are from Europe or based in Europe, doesn't mean that we are something from Europe to teach to anyone in Africa. It turns out that we're based here, but some other of my colleagues are also based in South Africa or Kenya or Nigeria, and so we're going for the talents, not necessarily thinking of like what is it that Africa should learn from entrepreneurs in Europe or something like that. So yeah, I think that's the important thing. And to your point of building bridges, I think it might be a little bit more true when it comes to investments. We are seeing, of course, a lot of the VCs in the ecosystem being backed by European and American DFIs, and that's something that's definitely been fueling the ecosystem quite a bit. I hope it will continue. There are some concerns that in the context of political crisis in Europe, for instance, with Ukraine, and also climate crisis. In the times of climate, people tend to refocus on themselves, and there's a risk that, as we have done with COVID, when it comes to climate crisis, we then refocus investment just on Europe or just on the US. And so I hope we will not make the same mistake as we have done in the COVID crisis. So that's why we're really pushing this topic of climate for DFIs and LPs to invest in Africa, because there is an urgency now. Sorry, don't.
Well, you touched on two. You've segued perfectly for me to keep us to time here. You mentioned those two things there: climate, which we're about to come to. But before that, we're also going to talk a little bit about policy and governance, which you've also touched upon there. So obviously, we think when the outside looking in, and often see like the graphics when it comes to fundraising and growth in the ecosystem, we're traditionally often talking about the big four with the emergence of some other ecosystems. Batin talked about it there, though. You wouldn't always necessarily draw to other markets like Tunisia, Senegal, and others when it comes to talking about how much money is being raised. But when it comes to being pioneering ecosystems, when it comes to policy and that collaboration with the private sector, we're seeing that places like Tunisia are flourishing examples of that ecosystem building. And it's been sparking many others, like we've had a lot of talk about Nigeria's Startup Act this year, Kenya, the Democratic Republic of Congo, Namibia, to follow suit, as well as South Africa, to establish their own startup acts. So I guess for me, and I'm being quite new to understanding a lot about the startup acts across the continent this year. It's definitely something I want to understand more about this year. But in conversations, I think a lot of people talk about there is a startup act and the government's going to be doing things to help startups out. But I kind of want to know what are the fundamentals first and foremost that makes a startup act. If I'm a founder, an investor, an ecosystem operator, what broadly is it that it's going to affect for me in that day to day? Matthew, I know you've been heavily involved in the startup act in South Africa that's been emerging recently. So I'm going to throw straight to you to say, if I'm somebody new who's trying to understand what startup acts are, very high level, what fundamentally are they about?
Great, thanks. And so money needs to flow, ideas need to flow. The various players within the ecosystem need to find each other. And also for us to be able to have companies that are able to scale, that are able to grow, that are able to go beyond the borders of our own countries, we have to have a very healthy entrepreneurial ecosystem. And we also have to have the government supporting that. So political will is very important. And in essence, if I had to break down what a startup act is, it's a policy framework that guides the government as to how to support, nurture, and to enable high growth, high impact startups, right? And also from how to incubate them. It gives them guidelines on how do you incubate, how do we accelerate, how do we capacitate, and how do we invest in these startups. And I think it's also important to be able to identify what we mean by saying a startup, because I could wake up tomorrow and start a small business that has no intentions of growing or scaling. I'm just a community bakery, and I don't have intentions of investing in research and development. I don't want to build my own specific intellectual property. So when we say startup, these are high growth, high impact enterprises that are highly innovative. They invest in research and development. They develop their own intellectual property, and their aim is to scale beyond their own borders and hopefully one day sell or list or merge, at very high multiples. So it's important that we then create a policy framework that understands the nature of these companies, because intellectual property has to flow from one entity to another, from one jurisdiction to another. Investments has to flow from one country into another or internally within a country. So startup acts are how do we as a government ensure that we have policies that understand the value of these startups in our economies. They create jobs, they contribute towards our economic growth, but then how do we make sure that we remove all the barriers and we create all the necessary structures and channels? So, Tunisia was a great pioneer in 2016, I think. They came together as an ecosystem, various incubators, accelerators, investors, and they just knew that they have a very strategic position geographically. They have to leverage the Africa, the European, and just where they are geographically based, and be able to support their startups. So these are in essence frameworks, policy frameworks that governments can utilize to support startups.
Fantastic overview. I think I now fully understand what it's about,
Great.
certainly more than I did before I asked that question. So if there's one person you've helped enlighten, it's certainly me, but I'm sure for the rest of us as well. I feel that naturally this sets up Fatin. Obviously, you've already touched upon it, and you know the ecosystem in Tunisia really well. So I'd love for you to be able to, obviously it's a journey from 2016, 17 to now. What are two or three of the clear indicators that the acts had impact on that market, and how could that potentially set us up for success in other markets as well as we continue to build those bridges or those innovation bridges that we talked about earlier?
Yeah, just for a little bit of context, actually the Startup Act is based on 3 pillars. The Startup Act itself, it's like the innovative legal framework that promotes the creation of startups in Tunisia. And it's basically a bunch of benefits for startups, for entrepreneurs that launch innovative solutions. The second pillar is the Startup Invest, which is a financing framework designed to create an ecosystem of the emerging VCs. So this is actually targeting investors to come and create investment funds dedicated to Tunisia. The third pillar is the startup ecosystem, which is a support framework for SSOs. So the SSOs are the startup support organizations and for startups at the same time. And that has been set up with the aim of consolidating the entrepreneurial ecosystem. So 3 goals are put at the upfront of the Startup Act initiative as a whole, is to first provide financial support to startups, because one, for example, of the benefits that the entrepreneurs can have if they have the startup label is the scholarship, the entrepreneur scholarship. Yes, so it's a kind of safety net that entrepreneurs have during a year where they can try and experience their ideas without living in precarity, without steady income. So the government will be paying the salaries of people for a year while they are trying their idea. The second thing that has been very, very important in the Startup Act is that there are a lot of fiscal incentives, so financial incentives. So that is really helpful for startups that are starting up and they don't have a lot of incomes. So I would say that 3 of the major impacts of the Startup Act is first the creation of startups. I mean, we are a nation of 12 million. We started seeing startups in 2011 or 2012, and now we have 822 labeled startups. So I'm not even counting the startups that are not labeled. I think that we exceed way more than 1,000 and 1,500 startups. The second thing is the attractiveness of investors. I think that with the exit of InstaDeep, more and more investors are very curious about what's happening in Tunisia, but also with the Startup Invest and the incentives that we are giving to investors. It is really putting Tunisia on the map and pinning Tunisia as an attractive destination for VC funds. The third thing I would say is the fact that there is more mobility for our entrepreneurs, because with the label of the Startup Act, they have the capacity of having more hard currency, and that facilitates their mobility, and that facilitates also the fact that they would be able to go and explore other markets and also penetrate other markets. So I think these are the three things that the Startup Act has as an impact since its inception. We are muted, Anthony.
My words of wisdom were missed there. I'll try and repeat myself. But no, thank you. I wonder though, obviously Tunisia is a fantastic example of things working, and obviously it's taken time for the act to be implemented and to start seeing the results. But is there anybody here on the panel, this is kind of an open question, that has any concerns? Are there things that we've seen not go well with other acts this year? And I ask that to be more highlighting the challenges that we need to overcome, or anybody that's starting to consider an act needs to think about. So open to the panel here. Does anybody want to flag anything that they say is a concern or a challenge in developing and successfully rolling out startup acts?
I'd like to just maybe highlight something, not necessarily something that I've seen, but something that, especially in the sort of creation of the Startup Act, must be considered. And this is really with regards to the governance and the regulatory sort of agencies that would be responsible for, any of the incentives or provisions of a startup bill or a startup act. Now, oftentimes, prior to the creation of an act, there are several government agencies tasked with technology, innovation, the digital infrastructure, skills, and all of these different things. Now, if we don't ensure that we have sort of thought about, well, how will these agencies cohabit within the Startup Act? Out of these agencies, is there a particular one that would be tasked with the implementation of, in fact, that enablement and execution of the act to ensure that it would actually be successful? And only then would we be able to say, okay, now we're getting to a place where from a governance point of view and from a sort of regulatory agency point of view, there will not be confusion once we've actually signed this into law. Because, this can very quickly happen. And I think we've seen it happen with a lot of other acts and bills that are oftentimes passed, not just in Africa, generally. But this is a really important one. So in Nigeria, for instance, we do have the NITA agency, which is tasked with, the oversight of the Startup Act and the Startup Bill, which is really important to just ensure that, okay, there's clarity with regards to clarity and ownership, I suppose, with regards to, how do we really make sure that this goes from a piece of paper into something, as Fatin has said, that really would be a success for the overall ecosystem and economy.
Fantastic. So for me, that then goes back to when I kind of started asking about the acts going. I wasn't fully sure in understanding the detail of them. And I guess we need to be creating more awareness for the ecosystem to understand and follow that, so that when these things do come in, are put into place, what does it actually mean when something's signed off? What does that actually mean from a timeline perspective, that we're going to see an implementation of something that's going to have a positive effect? And I know that we'll make sure we do follow up in the sharing with the Startup Act in South Africa. There are regular events that are going on that people can attend and engage and follow what's going along. So I think that's a really important part, is being able to follow and understand how this process works. And hopefully that means that people put more pressure on to make sure things happen and can be engaged. And that's really down to everyone in the audience today is to kind of seek out how they can better understand that and follow the organizations, individuals that are doing that. I'm now conscious of time. It's 20 past. We technically have 10 minutes left. I'm going to see if we can slightly overrun, but I want to go for a couple of questions of the audience, but I want to go into our final area, which was climate tech, which Max had touched upon. And reading the report, there were some super interesting findings, but also some wider reports to read. And according to the PwC State of Climate Tech report, they're saying about 14% of every venture capital dollar is now going to climate tech. And that in 2022, it was about 70 billion funding was raised, which is up from 89% in 2021. So there's clearly a growing focus of climate tech startups around the world. And obviously we're facing climate challenges more increasingly. So with the growth of this sector, and we're seeing a lot of climate tech companies across Africa, I'm going to come to you, Matt, because obviously you guys do a lot with climate focused businesses. Is this potentially the industry that kind of can spearhead Pan-African startups exporting and going globally as a kind of a core industry that they're leading? But again, back to definitions. We've got green tech, clean tech, climate tech, several phrases that are being used within this area. So are some of these subcategories of one? Basically, can someone tell me the difference? I'm going to go with you, Max. Obviously, Catalyst have recently announced some of the companies they've backed. How are you guys defining it, and how are you differentiating between clean, green, and climate and everything else in between?
Sure. Yeah, I know it's a little bit confusing sometimes, but in a nutshell, I mean, the way we're looking at it at Catalyst Fund is that the overarching sector is basically climate tech, and we actually still need to make that sector emerge as a sector in Africa. We're still using fintech, logistics, and so on, the typical sectors, and it would be good to get this overall climate tech sector to emerge. But then within climate tech, we are, at least internally, we're looking at it in two subsectors. One is climate adaptation or climate resilience. And the other one is climate change mitigation. Until now, the vast majority of the funding, including in Africa, goes to what we call climate change mitigation. So basically, tech solutions that allow for reduction of CO2 emissions, in a nutshell. So how do we reduce the amount of CO2 that we put into the atmosphere? That's close to 90% of the funding, really. So all your pay-as-you-go solar, all your energy companies, and so on are in this bucket. The remaining one is climate resilience. That's what we're focusing on with Catalyst Fund, and that's basically tech-based solution to help people to adapt to the negative effect of climate change today. In our view, it's critical to increase the effort on this aspect, especially in Africa, because in the case of CO2 emissions, Africa contributes roughly to 2 or 3% globally. But when it comes to the negative effect of climate change, it's already being disproportionately affected. We have seen the amount of droughts, challenges in Eastern Africa this year, floods in Nigeria and other parts of Western Africa, water scarcity in Maghreb, in the Northern Africa, and so on. And that's today. Reducing the amount of CO2 emissions in the next 5 years, unfortunately, will not help people to adapt to these changes that are happening today. So both are needed, but we believe there is increased effort that needs to be done in the climate resilience, and this is why our aim, and as the name says it, we want to catalyze more funding in the climate resilience space. To answer your question on whether there could be innovation also going from Africa to the rest of the world in this sector, we do believe that this sector has presents a strong opportunity for this. To give you one example, in our current, in our last 10 investments, we have a startup in Kenya that's actually the first direct air carbon capture solution in the global south, called Octavia Carbon. Another one is in Morocco, a startup called Sand to Green. And what they do is they basically turn desert into arable land, leveraging solar-powered desalination system to desalinate something called brackish water, and then use agroforestry to grow climate resilient land. And that's quite innovative in itself by putting all together these different innovations. So there's definitely a lot of hope that this sector would bring global innovation. But again, with a focus on how do we adapt today to the negative effect of climate change in agriculture, in healthcare, in access to water, and so on.
I think that is a comprehensive overview and well-defined. Thank you, Max. I'm going to let everyone know we are coming to the end of the session. We're going to run on. All the panelists are happy to stay on for another 10 minutes or so. Although, Max, you were talking when I asked them that question, so I hope you can as well. Quickly going to go to all three of you and ask from an investor perspective, investor lens, and the ways you're investing, what we've talked there about Max about climate, clean and green. For you, what are the specific areas within that, specific industries, renewables? What is it you're looking at as investors saying these are the really interesting kind of sectors or solutions we're seeing that are prominently already rising in our various different kind of regions of the continent? So I'll go with Ashim, then we'll go to Matsi, and then we'll go to Fetin, and then we'll come to my concluding question before we go to the panel, to the audience for questions.
Yeah, sure. So at Aptera, we are more focused on, I would say, the themes. So what is it that informs some of these sectors? And for us, it's really about what is going to enable, climate tech as a whole. And looking at that, we really believe that there is the access to climate resilience that is necessary, and providing that access oftentimes comes through solving for financial distress or financial solutions. So to say, well, what are the financing solutions that need to be created specifically to enable climate resilience, for instance, or climate friendly, adoption processes and just that transition. So whether that is financing for retail consumers, for instance, or whether that is financing for SMEs to enable them to transition from where they currently are into a more climate friendly or, carbon friendly environment. But then also we look at, okay, well, as VCs, of course, we don't have as patient capital as, for instance, development finance institutions or some other financing sectors. And with that, of course, some of the heavy infrastructural projects are simply oftentimes out of reach for us. There's some really exciting stuff going on actually with regards to, looking at how you make wind farm blades more ergonomically efficient. But these are oftentimes really projects and sectors that are almost out of hand for some of the very early investors. And with that, we do look at what are these sort of nimble software solutions that could come in as really interesting. And I think one of the things that we find quite exciting is data, and how data is going to continue to be a really big play in this climate transition for Africa, and really the transparency in the data. So for instance, if we talk about carbon emissions, carbon credits, for instance, there's been a lot of opacity around, the creating, the verifying, the selling, the tracking of these carbon credits. Not just in Africa, but like in the global north, for instance, right? And then we say, okay, well, as Africa, we understand we may not be the biggest contributors, but if we don't start tracking this data, if we don't start really ensuring that we have our own sets of data and ways of actually being able to track and, to ensure that we have, the verification methods, we may at some point, be sort of at the back end of that. So these are the things that really excite us. So it's really about how do we enable the sector. That for us is, some of the things that we're looking at and find very exciting.
Thanks, Ashim. Fatin, I know you guys are kind of newly entering some of this space. So talk about where you're at and where you're going to briefly in terms of why that's got that new interest for you.
So To give a little bit of an overview, we are more focusing on green tech startups at Flat 6 Labs. We're actually running a program, a 5 years program and that is focusing on green tech startups. But we are very interested, and we are starting to looking into the climate tech startups because of, let's say, three major elements. The first thing is the growing demand for sustainable solutions, as climate change is a major concern in Africa. So this pushes more and more let's say, the demand for and the promotion for more sustainable solutions. The second thing is the abundance of natural resources in Africa. In Africa, we have it all. We have sunlight, we have wind, we have biomass, and these elements can be used to generate clean energy. And I think that the third thing that we are looking into, and where we see that there is a lot of potential in for the climate change, for the climate tech startup, is the fact that many African governments has recognized the importance of addressing the climate change and have put in place policies and initiatives that support the development of climate tech startups, like tax incentives, like financial programs and grants. So we can talk about South Africa, Ethiopia, Kenya, and also Morocco, who dedicated the whole renewable energy agency for the creation of the special economic zone for climate tech startups. So I think that this area is going to be, or the climate tech startups are going to be, the hot spot, the sweet spot for investors in 2023 and beyond.
Perfect. Thank you for that. And actually, I'm conscious of time, and so I want to move on to our final two questions now, which kind of pull us back to the bigger picture. And I asked last week on LinkedIn, what did people want to hear from this panel? And the two things kept coming up was, what would the panel's perspective be on this global VC market downturn over the last year, creeping in to next year? So really the question to you guys is, what does this mean for Africa in 2023? And what effect will it have on funds, deal numbers, deal sizes, and the just general market sentiment for growth? Max, I'm going to come to you first, and I'm going to go to Max.
Yeah, I mean, we Africans, right? We're always finding solutions. We're always finding our ways around the world. So as much as the world has a bit of a cooling down, readjusting, I think now, as we've spoken about climate change, the biggest opportunities, I think Fatin did say that we have the most arable land, sun, wind, hydro. So Africans need to innovate. Africans also need to invest in their own ideas. So governments need to rally a lot of resources around incubating, accelerating, and investing in such ideas. So as much as there's that's happening to the rest of the world, I think as Africans, let's take advantage of this.
Perfect, Nancy. And what about you, Max? What's your take? You know the numbers.
For this coming year, you mean, right?
For this coming year. I'm not sure you're psychic just yet, but give us your insights.
No. I mean, well, I've seen the numbers that Christophe and the team have put together in terms of projections, and you know, I believe they could again be right for next year. Of course, there's a lot of parameters that are still unknown. If we look at the very, very early signal of the data that we have for the first 4 weeks and a half of 2023, it's looking good. You know, we already have a number of exits. There's already more funding going to the startups ecosystem in January this year than in any previous months of January ever in the ecosystem. So it's you know, it's on the good track. I know people would say this was deals from the past quarter that were late, etc., etc. But here we're comparing apples with apples. You know, January 2023 with January 2022, and it's actually higher this year. So that's quite promising. Yeah, there's a number of funds that have raised capital that will continue to deploy, and that's definitely exciting. I think, as much as we know that there is a a slowdown globally in the VC space. We have seen that Africa was a little bit more resilient to this slowdown, and I think it's important that's something that we try to really do at AfricArena is stick to the data, and as much as we can get the sentiment of investors and ask them if they think it's slowing down or not. I think it's important to look at what the data is, because of course it's it's in the investors' interest to say that there is less capital, because this is also a way to push down valuations and so on. But yet there's a number of investors still chasing deals out there. So yeah, I think we have moved from a startup tilted ecosystem end of 2021, early 2022 to an investor tilted ecosystem. But it's important to maybe keep things a little bit balanced. There's way more capital now than there was ever in 2020 or 2019. So yeah, I just want to mitigate a little bit the screaming of the tech crunch and there's a slowdown going on. There's a lot of investors. We still got a lot of money to deploy in the ecosystem, and I think we should encourage startups to continue fundraise, continue to build great solutions, and investor will always be there to back them.
Well, it's just as well as a couple organizations reporting on the numbers on a regular basis so that we can track and follow to see how that goes in the course of 2023. So I'm going to finally go to Ashim for her thoughts and Fatin your thoughts, and then we will wrap it up for today, because I appreciate that we've overrun slightly and I know you're all very, very busy. So Ashim, over to you.
Absolutely. So I couldn't agree more with Matsi. I remain optimistic around the African landscape as a whole. It has always been one marked by resilience in all things and all matters, and I believe that it will continue to be resilient. One of the trends, I suppose, that we will continue to see, and that I personally actually think is a positive outcome of potentially this VC winter pullback, whatever you want to call it, is that while some of that pullback, in fact, has been informed by some of the foreign players pulling out due to some of the headwinds that they were facing in the US, or, particularly in the US, sometimes in Europe, a lot of the African players have remained. In Africa, we have a lot of micro funds, and these micro funds have continued to fuel that ecosystem. They have continued to drive companies being able to fundraise, and they've ensured that that ecosystem continues sort of being catalyzed. So I think this is a great development because, one, it showcases the strength of the indigenous, investor networks and the indigenous investors, but it has also given the, local players an opportunity again to, in fact, be more active in an ecosystem that had sometimes seen them crowded out by some of the bigger players that come with bigger ticket sizes. So I recall one of the data points that Max mentioned, which was over 1,000 unique investors in Africa this year. And, that definitely is driven by more, micro funds being able to play again, where some of the larger players simply bowed out. This is a great development because the micro funds are building track record, which means that, in a couple of years' time, when, we will have more of the bigger funds because, the micro funds grow into medium-sized funds, into bigger funds, which means that as the startups are growing and raising larger rounds, so will the local indigenous VCs grow just with that ecosystem being able to continue to catalyze not just the smaller rounds, but eventually the bigger rounds as well.
Fantastic, Ashim. Thank you. And finally, if there's anything left to say, Fatin, it's up to you to kind of conclude this before I wrap up the session. No pressure at all.
Exactly. Everything has been said, but I would only say that Africa has always been and still attractive for startups, but also for investors. African entrepreneurs are resilient, African entrepreneurs are innovative, and African entrepreneurs are created needed solutions that really tackle day-to-day problems. So that's why don't be afraid to innovate and to go outside of the outside of the box and think outside of the box, you will always find investors, you will always find people who are ready to back you up. So as a conclusion to this, like, be hopeful, keep on creating, keep on innovating, money will flow.
Perfect. I think that's a nice way to conclude it. I think just to kind of wrap this up, and firstly, you can see on the screen here the QR code. You can download the full report now, which is live. One of the things I think also, from my perspective, obviously we know that globally it's a challenging time on a number of fronts, and we are going to have a tougher year in 2023. But the positive notes we've ended on are legitimate ones. And I think as well, in the context of the entire of Africa, and we talked about before, it's 54 countries, we're also seeing the emergence of a number of ecosystems that previously weren't there. I mean, Sudan, which is very close to my heart, something I spend a lot of time in, is now seeing venture capital raised internationally. We're seeing companies on YC from these ecosystems. So the reality is there is more talent that's going to rise up, which is going to attract more investment and support across the ecosystems, which is why it's really important we do this bridge building stuff. But if I could recommend everything for everyone to do on this call today is download this report, because we've only just touched upon some of the things that have actually been looked at from the year gone to what's coming the year ahead. And I really recommend taking this report, reading over a coffee or a glass of wine whenever you can, and having the debates in your ecosystem, engaging with AfricArena this year in the several locations that will be. I know several of us who are on the call today will be at some of those events. But to wrap us up, thank you all for still staying on. I saw the participant numbers haven't been going down in the last 15 minutes, which is brilliant. But once again, thank you so much, AfricArena, for putting this on, to the entire team. Thank you to my fantastic panelists. I've shared their details in the chat, so please do connect with them. Once again, thank you to all of you for joining us, and we look forward to supporting, connecting, and working together to grow this Pan-African ecosystem even further in 2023. And we look forward to seeing you at the next event. So thank you very much, everybody. Thank you, my panelists, and we will see you all later on. Bye, everybody.
Well done. Cheers.
Cheers.
Go well, everybody. Take care.